Yeah, I think one of the things I really like about investing and specifically value investing is that well, there are a couple of things. One is it's the broadest of any discipline that you can be in, because any business you might look at, it kind of touches on. I mean, the factors that can affect the future of a business touch a number of different disparate disciplines. And the second is the learning never stops. So it's kind of continuous learning, if you will. And so I think as I look at, so I think Pabrai Funds is almost 20 years old, and then before that, about probably 5 years before that, I was managing my own money, the value style, if you will. And so this 25-year journey, there has been a lot of learning. I mean, if I look at Mohnish as an investor 25 years ago versus today, there's plenty of commonality in terms of core principles. The core principles don't change, but there's a lot of learning and especially a lot of learning from the mistakes. So for example, if I look back, and especially if I look back at the areas I've had trouble in, right? One of the big areas that I've had trouble in is levered institutions. So I've had a few picks go to zero because they were levered, and sometimes it's been leveraged companies. So what I've learned is that for whatever reason, I tell myself, Mohnish, maybe you just don't understand these things, so just stay away. Even if it looks good, just stay away. And actually, if you study Berkshire Hathaway, for example, so one of the things about investing is that John Templeton used to say that the very best investment analyst will be wrong 1/3 of the time. And so even if you look at Warren Buffett and Berkshire Hathaway, and for example, if you look at, they've bought like 80 businesses over the last 50 years, there's probably at least 1/3 of them, maybe even 40% of them, that didn't turn out so well. And so if you weight it by dollars spent, the record is great. So they've been right on the big ones. But if you equal weight them all, the record wouldn't be great because there were a number of them. So Berkshire Hathaway, for example, bought a lot of retailers, a lot of furniture retailers and so on. Most of them have not worked out so well. So they had a lot of success with Borsheim's, which is a jeweler. They had a lot of success with Nebraska Furniture Mart. Subsequent to that, they bought a lot of other jewelers and other furniture operations. Most of them didn't do so well. Those are very tough businesses in general. Retail is tough. But if you look at Warren Buffett in certain areas, let's say, if you look at him on, let's say, levered institutions, banks, etc., almost no blemishes in the record. Close to 100% batting average. I think he had trouble. The only time he had trouble with banks was when he invested in Irish banks. But a few people got into trouble with that. But I think if I look at banking, for example, to the 50-year record, almost no blemishes. I mean, they almost hit it out of the park on that front. So I think that all of us as investors, or if I look at Warren Buffett in media, he's done really well historically, really good at media. He's done very good at consumer packaged goods, very good at brands, not so good at retailers, right, and such. So all of us have our, I would say, our circles of competence and where we are really good and where we might not be really good. And so one of the things that I'm trying to continue to learn is, where to go hunting and where to avoid. And so one of the things I've learned over the years is there's some miswiring in my brain that makes me miss the issues with levered institutions. So try to avoid going there. The other thing is, I think that in this business, the continuous learning, you start seeing patterns. and you can, many times you can connect dots that are not obvious to many other investors because they may not have seen all these different things play out. And sometimes when you can connect the dots in a manner that the market can't see, you can do really well with that because you can exploit inefficiencies there. So it's a journey, it's continuous learning, it's trying to figure out what to avoid, and just keep the humility to know that 4 out of 10 times at a minimum you're going to be wrong, and go from there.